Hello everyone and welcome back. So before I dive right into the main objectives of this recording, I just wanted to send a huge shout out to everyone who's subscribed, everyone who watches, everyone who's commented and liked the session recordings. I just wanted to thank you personally. This channel wouldn't really exist without the viewers and the subscribers, and I really want to show you all my appreciation that I genuinely am grateful for all of your comments. This channel, just a few notes about this channel, was really an experiment that I thought to sort of explore in the summer, and it was purely out of boredom. I thought to myself, well, if I know so much in terms of technical analysis, then and there's nobody out there on YouTube recording these, then if I did make a recording, maybe that would help others. If it addresses somebody's anxiety, because there was a lot of fear-mongering in the recordings that I witnessed. There was a trend about FOMO, about, whether it's safe to get in right now, and I think that's a false way of thinking towards price action. There's no point in having fear of missing out or any sort of anxiety or depression. Investing should be a great sort of enjoyable experience, and as long as you understand some basics in terms of technicals and fundamentals, then really it should be an enjoyable experience. So with that in mind, I've sort of embarked on this recording mission, and I am extremely humbled from everyone who's left me comments. I've learnt a lot, and I take everyone's comments on board. So feel free to make as many comments. Again, if you're a new subscriber, new watcher, then and if you haven't subscribed, then please do consider subscribing. And again, let me know if this content is useful. Okay, right, so I'm going to dive right in now. The focus of this presentation is for me to encapsulate all of the harmonics that we've recently seen over the last few months, okay? So I've been using this chart here, which basically summarizes all of the harmonics. Again, if you're new to the channel, I'll very briefly explain. A harmonic pattern is an encapsulated price sort of trajectory pattern, if you like, that encapsulates investors' psychology. It very accurately predicts price points and price landmarks that you can potentially see appreciate. So you have 5 waves. You have XA, which is your wave 1, then you have wave 2, 3, 4, and then you'll have a 5th wave after D. And D, price point D, if you like, in this structure, is a reversal point. So if you just take a few seconds out to search in harmonic patterns on Google Images, you'll find that D is always ended with this sort of arrow pointing in the opposite direction, like for instance over here. And the magnitude of that reversal, it does entirely depend on where price is respective to whether it's in a consolidation, whether it's in a trending momentum, and various other factors. But the point is that D is a reversal. So you have waves 1, 2, 3, 4, 5. Okay, 5 waves. So going back to our original charts, you have 4 traditional patterns, and then you have non-traditional patterns. And I'm only going to cover one non-traditional, and that's the deep crab here. But the traditional patterns are the bat, the butterfly, the crab, and the Gartley. And they all are descriptively different, diagrammatically, and how they appear in the markets. So for instance, they're all defined by this B point. The middle point of the harmonic is definitive for that pattern, and that can give you a fairly good trajectory for your D. Okay, so a point to take away from this is that you really have the leg, if you like, that is used in the entire pattern is C to D. Okay, C up to D or C down to D, and then the reversal. So let's start with the bat. So the bat says that the B point will be a price trajectory from X to A, and it should be anywhere from 38% to 50%. Okay. So I'm going to start this session off with Virgin Galactic, and I'll also give you the dates because I think it's useful for you guys to run your own due diligence. So this is on the 4-hour time chart, and between 15th of April and 8th of May, we had this bat. Okay, So how you would draw this out is if you fib x, if this is your x here, okay, you fib x to A, okay, making sure that the gray lines are marking the end of X and A, okay, accurately. So you need to have a swing high and a swing low. And we can see here that price made an XA, B closed at 50%. If you look here to your left, price came back to 50% retraction, okay? And the bat can go anywhere from 38% to 50%. So we have a bat, and our D point tells us that price would go anywhere, price would go roughly around the 88.6%. So if we look to our pattern that formed, we had an XA, B, C, and D was at 88%. It actually overshot to 1. And that's another interesting point that I've realized, that although the diagrammatic representations in the literature are represented by these fixed numbers, the reality is a lot more flexible. You know, you can have overshooting and you can have undershooting as well. So my take-home message is that D and C's are all, especially C's and D's, are very flexible, and even to a certain extent B. So it depends on the context, and it depends really on how the patterns are forming. So I'm going to start things off from the first pattern. So the first pattern is a bat on our chart, and we've had a 50% retraction, and a D was 88%, and then we've also had a reversal here as well. Okay, and that reversal there was basically from the 8th of May until the 21st of May. Okay, so that is the first harmonic pattern, the bat. So the second harmonic pattern is a butterfly, and a butterfly is a different sort of beast altogether, where you have a B point mathematically predicted at 78%. That gives us a D projection of anywhere from 127 to 161. So from memory, we did see a butterfly in Tesla very recently. So if we switch over to Tesla, here we are, and let's bring this down here, here we are. Okay, so this here is illustrating a butterfly, and I'm going to explain this in a bit more detail. So again, we can see here that price, if we minimize the price structure, that this was a trending market. Okay, we did still have a pullback, but we didn't have that much of a pullback as much as we saw what we saw in Virgin Galactic, okay, because that was in a consolidation. So it's a different sort of set of architecture, if you like, from a price viewpoint. So again, look, if we fib our X, this is our X, swing high, swing low, X to A, and if we fib this entire zone, we can see here that between the 31st of August 2020, we had our X, then we had our A, B was at 78.6% exactly, okay, and then we had our D at on the 30th of November, 27th or the 30th of November. Okay, so again, please run your own due diligence, but this is a butterfly over here. And if we then, let me just confirm those dates again. So we have the 31st of August marking our X, and D was marked at the 27th of November. So that is our butterfly, okay? So we have pretty much our X, A, B, C, D, and then we had a reaction there. Now, I just want to measure this pullback here, okay, just as sort of a research purposes. So this pullback here we had was at 11.49%. So that's interesting. So this was a butterfly, okay. So the next on the list, so we've done bat, we've done a butterfly, and these are all bearish. This is bearish, and this is bullish. Okay, so that basically means the reason why these are bearish is because they're all defined by the D point. So the D point suggests that there will be a bearish pullback, which is what we saw in Virgin Galactic. D point in the butterfly for Tesla gave us a 11.49%. Okay, so that's why the direction is titled in accordance to price point D. Okay, so the next one is the crab, and I believe we did see a crab in Neo, if I'm not mistaken. I may be mistaken. Let's flick over to Neo over here, and let's zoom this in. And price is still pulling back. Okay, so basically our swing points were, let me just give you the dates first. Again, let me just take a pause here. If somebody could actually timestamp this for me, if you're watching this entire recording, then if you just make recordings, make a note of the times on when the next harmonic is, and just add them in the comments, that would really help everyone, because I'm focused on documenting the harmonics. So if somebody could really timestamp this for me, I'd be really grateful. Okay, so now we are on Neo, and Neo has a crab. Crab suggests that you have a B point of 38% to 61.8%, and then a D point which is much higher at 161. It suggests that you have a fixed 161 rather than what the butterfly suggested, a range between a 127 to a 161. So let's go check this out. So we had our swing X at the date of the date was the 24th of November. Okay, and our D point seems to have been, because prices reversed since, has been on the 11th of January. So let's fib this now. So let's fib X to A and bring this right here. And we can see here that price actually reversed exactly at the 61.8%. Let's expand this price action and see this in a bit more detail. Okay, here we are. That's interesting. If you notice here, price reversed at the 61.8% exactly. It touched it and then it reversed. Okay. Now a lot of people say that that technical patterns don't really work. And that's one of my motivations, really. I'm not suggesting that they always work, but I think it's good to be mindful. I mean, I've watched so many people talk about how these don't work, they're outdated. You just have to bear the context in mind, and just be mindful that these can work. Now, nothing always works. You don't have to rely on one tool all the time, but I think it's good. It's a good tool to be familiar with. Okay, right. So we had our X, A. We then had our B, our C. We'll measure the C here as well, and we can see here that D went very close to 161. 161 was actually $68, 68.77, and we didn't make that in this. We made a high of $66.96. So again, going back to the notes, this is a guide. Use this as a guide. I think you can use a 10, 20, 30% sort of threshold of as long as it clears one level, then I suppose anywhere closer to that level would closer to the proposed theoretical model level would be considered a completion. Okay. So here we have had a completed crab. Okay. Let's just delete this, and just out of interest for research purposes, let's actually measure the pullback so far. So the pullback so far is a whopping 15.76%. Okay, and if somebody was following this, let's actually measure C to D. C to D, right, was 58.97%. That's not a joke. Okay, so if somebody says harmonics don't work, well, you have to make up your own mind. Okay, right. So the other aspect of this that I wanted to look at was C. Okay, so let's actually expand this structure a little bit and fib A to B. Okay, and we can see here that price, the suggestion in the literature is 38% to 88%. Where did it actually come? It reacted at the 61.8% here. 61.8% over here. Okay, it could have come all the way to the 88% line here and still qualified. Okay, so that, my dear friends, is a crab. Now the next and last one on the list is a Gartley. Pattern, and I think we saw a number of Gartleys actually in snowflake. Snowflake rings a bell. So let's actually measure this. So we have in a Gartley 61.8% pullback, which is very similar to a crab actually. So if there is a grey line between a Gartley and a crab, and I'll explain that now as well. So a 61.8%. Let's actually fib this first. So we're going to fib this swing point and this swing point here. Again, this is snowflake time chart 4 hours, and we're going to be fibbing data from the 13th of November to the 8th of December. Okay, so fib that region there, and we can see here price stopped at the 61.8%. Okay, let's actually expand this and actually see what happened. Price didn't actually close. It does look like that because I've got a lot of colors here, but if you notice here, let me pen this out for you. Price actually stopped shy of the 61.8%, but it had all of the other characteristics of the Gartley. So I think that's a very interesting sort of thought process that you have to adopt, that these are just guides. So 61.8% was a tad bit missing there. Okay, and let's see how price actually reversed. So the suggestion here is that the Gartley comes from XAB 61.8%, C, that massive range 38% to 88%, and then our D would be 78.6%. Now if you notice here, we had our XAB, which was very close to 61.8%. Then we had our C, which was quite shallow. It wasn't the 88%. Okay, it was quite shallow, wasn't it? So we had X, A, B, C, and then our D. Look at this here. Look at this. If you switch your attention to your left, 78.6%, 78.6% here. And this is recent price action. This only ended last 2 weeks ago on the 6th of January. So while we're here, let's actually measure this out as well. Let's see how much this actually reacted. So the reaction for this Gartley was 21.8%. 21.8%, okay? Now let's also measure this point here. So C, the leg from C down to D, was 25%, okay? So that's interesting. Now, the current picture for snowflake, so we've done the 4 patterns. We've done the bat, we've done the butterfly, we've done the crab, and we've done the Gartley. Again, I'd be very grateful if somebody could timestamp this for me, please, because I've got a number of thought processes that are running through sort of my mind. This is unscripted. I don't have a sort of plan. I'm just sort of, going along as much as sort of as far as I can. So expanding the thought process from the Gartley, right? D stops at 78.6%, but given that this can go, the B point can go to the 61.8%, our D could equally have gone to 161, giving us a crab. So the crab looks like this. Would have looked like this, basically. We would have had our fib from X to A, and so we had our X, A, B, 61%, C, and then our D could have been $102, and that would have been a crab, okay? So that is an interesting sort of thought to bear in the back of your mind, okay? When it comes to Gartleys, they can turn into crabs. Now, lastly, the current illustration, let's fib this actually. So if we fib this entire move, interestingly enough, if we study this, then we have our swing point the same, 13th of November to XA would be the 8th of December. So we had X, A, B, this stop here, right, was 78.6. So we had a Gartley form within the 78.6 butterfly. So we had a Gartley form within a butterfly, because, let me just say that again, okay? So we've already seen a completed harmonic shaded by the darker blue, right? This structure here, where we had X, A, B, then we had a C, D reversal over here, okay? And that was very accurate enough besides the point of the B point. But where it stopped was at the 78.6%, and the 78.6% gives you a butterfly, and that will give us a D point of 127 to 161. Okay, so let's draw this out, and this is currently in formation. So we have X to A. Okay, that is why I have this white box here. So so far the pattern has complied. So we have X, A, B, C, D. Now C was needs to be readjusted. So let's readjust this now. Again, the reason why I have this big range here is because if we fib the A down to B, if you like, then the box pretty much encapsulates 38% to 88%. So price can reverse anywhere from there. So if we actually take notice, let's actually bring this a bit more in. Here we are. Okay, and also if you notice that C was here, I mean, maybe this would pull back a bit more. Who knows? This could sort of make one last sort of move up. There's nothing to say that this would completely negate as well. I've seen those happen as well. So although this is the current formulation, there's nothing to say that this would just, if this goes up and if this breaks, so the acid test point, I suppose, you can sort of keep this knowledge in the back of your mind. The acid test for this would be that if price breaks the previous high, then the butterfly in formation is negated, right? Because it's made a higher high. So I think it'll be an interesting sort of area of observation over the next few weeks if price breaks this threshold. So far it's completed the Gartley, and currently it's in the formation for the butterfly. It's completed a Gartley, right? 61.8% was a Gartley inside, and currently it's shaping up to be a butterfly. So I think that pretty much covers all of the harmonics. Let me just see if I can just tidy up some of these and find some other additional harmonics. So we've done a bat, butterfly, crab, and Gartley. Let's do a deep crab, because I think there were a number of scenarios that we had drawn up on Zoom that were quite interesting. So Zoom, and I'm going to do Bitcoin right towards the end. Now, Zoom has had a number of interesting scenarios. Now, I've deleted all of my harmonics, so I'm going to start from scratch. So this would give you a good exercise to see how you would actually pin harmonics from scratch. So the first harmonic that I want to pick out straight away would be from this swing point here. We had a swing point here, right? Swing low and swing high, right? And I'm imagining that this price action hasn't occurred yet, okay? So my thought process for this would be, let's fib this. If we fib this from the 10th of November 2020 to the 30th of November, 20 days of price action, right? If we fib this and drag this out, then we can see here that we had an 88.6, which is classed as a deep crab, okay? And a deep crab is actually an exotic one that I haven't yet covered. So we've covered these four, and the fifth one would be a deep crab, which is quite interesting. So a deep crab can again take a bullish form or a bearish form, and this was a bullish form. So we have XAB at 88.6, and then D is proposed 161. So if we go back to Zoom, we had our, I'll actually draw this out as well. So this was our X on the 10th of November. On the 30th of November, after 20 days, we had our A. B here, we can very clearly see, was an 88.6 pullback here, okay? An 88.6. We then had our C, right? And then our D was 127, wasn't the 161, because we had a very sharp pullback. We can equally argue that maybe this here was our D. Okay, let's actually measure this pullback. This pullback here that we had was 21.7%. So that was interesting. So this was a deep crab, okay? So that's a deep crab. Let's actually see if there's any additional harmonics here. There were a number of harmonics sort of converging all together. That was quite interesting. So I think the first one was from this swing point here. Let me just grab my pen. So from this swing point here on the 12th of August, okay, 12th of August, and this swing high here, okay, 19th of October to the 11th of August. Okay, so if we fib this region here and drag out the fibs, we can see here that price came to the 61.8% exactly. Okay, and the 61.8%, as we know, can be one of two things. Can either be a Gartley or a crab. Okay, and a Gartley gives us a 78.6% trajectory for price point D. So let's draw this out then. So this was our first Lego triangle, X, A, and B, 61%, right? 61%. Let's actually expand this to show you guys exactly. Here we are. We can see the candle piercing the 61%, okay, and then closing above it and reacting onwards. Okay, so this was our XAB for the Gartley, and then we had our B, C, and our D was actually here, which hasn't yet completed. But because we've had some form of a reaction here, price came close enough. Let's actually measure how close it was. So we can see here the two thresholds, 61% is here and 78% here. And the Gartley proposes that the D has to be 78%. And it was halfway between the 61% and 78%. So I think I would write this off as a completion because we've had a 20%, 21% reaction. It's also interesting that we had a pattern, a deep crab, if you like, within the structure. I mean, that's quite common. You will see that. So price action, the view I take on price action is that it's fractal in nature. So you can always have multiplicities, various different multiplicities of converging patterns that formulate within one and another. Okay, right. So that is, I think, all there was to discuss. I suppose the thought process for the early thought process, or a healthy way of thinking of price action, could be something like this. So let's say, for example, we're looking at Zoom now, okay? And from a structural viewpoint, from a price action viewpoint, we can already see that we've made a swing high and a swing low. Okay, that's presuming that that this swing low holds. Okay, so if we now fib the swing high and swing low, okay, it's good to be mindful of the thresholds, of the fib thresholds that exist within the price structure. So for instance, where is your 38%, 50, 61 and 76% and 88%? And if there is some form of a pattern, of a competing pattern, suggesting that there would be some form of reversal, then that could suggest the build-up of a harmonic. So what that means is that we've had our XA, and hypothetically, if this was to go up to the 70%, for example, 78.6 level, and in that process, in that price there, form some form of a divergence, then that would suggest that maybe price would reverse, and in that process create a harmonic. Okay, so you have to sort of build your thought process and find additional evidence to support your sort of strategy, if you like, in terms of your bias. There's no point just buying somebody else's bias. You have to formulate your own bias, and there's plenty of tools out there to make your own sort of thought process. It just requires some additional thought process and some research. Now, I'm going to wrap things up with the last harmonic, and that was in Bitcoin. And this is just to illustrate that the suggestions made in literature are purely for guidelines only. So we've seen one deep crab in Zoom just previously completing above the 161. Okay, I'm going to now show you a deep crab here. Sorry, excuse me, not a deep crab. This was just a regular crab. Because if you look at our diagram here, a regular crab suggests that price point B would be anywhere from 38 to 61%. And we did see a 61% in Gartley, in the Bitcoin, sorry. And a D was much higher. So let's look at Bitcoin now on the weekly time chart. So this here encapsulates all of the price action from the dates are the 11th of December 2017. Remember, this is the weekly time chart, so the context here would be much larger. So the X was at the 11th of December, and our B was the 3rd of December. So that was an entire year. Okay. Let's actually remove this and start from fresh. So if we then fib this point here and this point here, okay, these 2 points, then we have an X, an A, and then we can very easily see how B reacted at the 61.8%. Okay, so then we had our C, and then look at our D. So our D for the crab is 161, but we went all the way up to past the 2. That's the point that I really wanted to highlight here. That use the diagrammatic representations as guides only. So we had our D point, which was represented here by the green line here at just under 3,000. It had a fib relationship of over 2, okay, and it's reacted much higher. So I suppose when you have a trending price action, then D could overshoot. And again, if we switch this down to the daily time chart, okay, we can quite easily see, let's actually measure the reaction that we had. So the reaction that we had, the reversal that we had, or the pullback, was 26%. Okay, so I would deem this a completed harmonic. Okay, so I think it's important to be mindful that that there are some variations that do exist, but on an overall basis, I think it's a great tool to be aware of. Okay. Right, I'm going to wrap things up. Thank you very much for staying with me right towards the end. And again, let me know in the comments section, please, if I missed any detail out, if this sort of content was useful. And if somebody could timestamp this for me in the comments as well, I would be really, really grateful. Okay, guys, thank you very much for watching. Look after yourselves, and I shall see you all in the next recording. Thanks for watching.